Did you know 2022, which is this year, is the final year for the 100% depreciation on furniture, fixtures, equipment, perhaps a car? So if you want a valuable tax deduction, go out and spend money as long as your company needs it, needs the asset, and you can take advantage of that final year of depreciation. This is Lou here with tax tips, keeping more money in your pocket. Year-end time for small business owners is a very hectic time. There's a lot of things going on, ramping up inventory, ramping up your sales for year-end, proper planning, and a lot of small business owners don't have time to worry about tax strategies and tax-efficient planning. But with a proper tax advisor, you shouldn't have to worry about it because your tax advisor should be worrying about it for you by advising you on accelerating expenses that are coming up in January and February. You can push them forward and pay for those expenses at the end of the year to take advantage of the tax deduction. Also, not a lot of people know this or not, but you can rent your home up to 14 days to your business, and it's tax-free to you, but your business gets a valuable tax deduction for those 14 days. So it all starts with having good books, right? You need to have good books. Everything's got to be properly categorized, income and expenses. And so you need to know what expenses are missing, what's not in your books. You can look at them and say, okay, I spent more money than this. I need more tax deductions. What happened? Or perhaps you paid for things out of your personal funds, your personal checking account, your personal credit cards. So you want to review those statements and come up with a list of categorized expenses so your tax preparer can add those expenses to your books. Also, around at this time and a year end, you want to review for people who owe you money, past due invoices. If people owe you money, go after them and ask them to pay you before year end. Conversely, if you owe your vendors money, make sure you pay them before year end so you could take advantage of the valuable tax deductions. When we talk about inventory, you want to make sure you have a good handle on your inventory, a good count to watch out for bad inventory or wasteful spending, where you're spending money that you probably shouldn't because you have too much of this inventory item on hand, and so on. But I think the most important reason to have a good count of your inventory is you want to know how much is available to potentially write off if you need some additional expenses to get your net income lower. You also want to make sure that you have proper financial statements to review your balance sheet. What items on your balance sheet could be written down and thrown off into the income statement to reduce your income. You also want to have a good handle on your income statement and your net income so you can properly pay that fourth quarter and last estimated tax payment that's due January 15th. Because failure to file proper estimated taxes can result in that dreaded letter from the IRS asking you for additional interest and penalties. And kid you not, the IRS is coming after everybody now. They are sending letters wherever they can and asking for additional penalties and interest, and they're more and more, less and less ready to give you an abatement. So make sure you file that fourth quarter estimated tax payment. Consultation with me, no charge. You can email tax, TAX, at Xendoo.com. That's XENDOO.com. Thank you.